And this is The Drop. Welcome to the Marcus Garrett Show, where I hope you learn more, earn more, and save more. But I know y'all not here for me today, so we're going to jump right in. As of this recording, Silicon Valley Bank, SVB, the nation's 16th largest bank, collapsed. On Sunday evening, March 12th for us, Signature Bank also failed and was taken over by regulators. Today, I'm with financial expert Kevin Matthews. Kevin, as I said, let's get right into it. And I guess my first question is, hey, what the hell is going on?
Yeah, man, it's unprecedented times for like the 15th year in a row, it feels like. But at the end of the day, we call this a classic bank run. It used to happen a whole lot in the 1920s and 30s. And it's basically when you have too many people asking for all of their money at once at a bank, and the bank doesn't always have that money on hand. The reason why they don't have it, though, is because they use that money to loan for mortgages, business loans, car loans. They also invest that money. So they almost never have the money right then and there. But when you get, millions and millions of people to say, hey, I need my money right now, that's what you run into. You have a bank run.
And you had viral post on Twitter is how we got here today. So I'll share this. I'll read it for the listening audience. Mm-hmm. I don't know why y'all aren't watching on YouTube at the Marcus Garrett, where we are universally branded. But Kevin said today, Silicon Valley, the nation's 16th largest bank, collapsed, and he has a rundown of what had happened. At the time, it had over 2,000 retweets. I'm sure I think it was like 2,500 the last time I looked at it. So you talked a little bit about there as far as the 1920s. The bank failed due to a classic bank run. Banks operate by taking a portion of the deposits, money from me and you, and loaning them to other people for mortgages, business loans. So what you're describing there, I guess these are normal business practices in these unprecedented times?
Yeah, these are absolutely normal practices. What the issue was here is that, this is Silicon Valley Bank, which means they primarily have tech customers, tech businesses, or businesses in the tech field as customers right now. Well, over the last year or so, which industry has been doing the most layoffs? Which industry has been struggling the most? It's been tech. So those are the companies that have had to withdraw those funds for various reasons. And it really kind of put a lot more pressure on the bank, more than what they expected. And they don't have other clientele that's not in the tech space, like a Bank of America or a JP Morgan does, where they're a lot more diverse.
For myself and senior millennials like me, we start thinking of Lehman Brothers, Goldman Sachs. Is that this again? What are we looking at here?
It feels like that, but on the base level as to how we got here and why we got here, it's not that. There are two reasons as to what happened in 2008. So as I mentioned in the thread, there are two ways that banks primarily collapse. Number one is you get a bank run, which is rare up until this week. But that's number one, is you get way too many people asking for their money. And then the other one is when the bank doesn't have people pay back those loans for various reasons. That is what happened in 2008. You had large scale, failure in terms of people not being able to pay their mortgages, not being able to pay their car loans. And that is why the entire economy collapsed back at that point in time. And at that point in time, we had what was called Contagion, which meant that it started with one or two banks, and then it spread out to just the financial sector as a whole, and then it spread out to the entire economy. Right now, this just seems to be a handful of banks, and it doesn't really seem to be that large scale, at least not at this point in time.
So for those who are not seeing it on the screen, you describe situation A, which we're talking about a bank run. Situation B is what the senior millennials like myself with our PTSD are living through, and that was the Great Recession. And the question that you actually posed and then answered is, why are so many people asking for their deposits back?
Yeah, so that goes back to who the clientele is. So we got to remember, when you go all the way back, it feels like 15 years ago now, but it's only, 3 from the pandemic. So when you remember when the pandemic hit and a lot of these tech stocks were popping, you left and right, Zoom was up 700%, Tesla was up. All of these tech companies were flush with cash because of what we call the stay-at-home play. Again, like Zoom, Slack, Salesforce, any tech company you could throw a rock at was doing incredibly well during that time. So those tech companies had a whole lot of money in 2020 and in 2021. Then the Fed started raising interest rates, and then things got real. And then you started to notice Peloton almost went bankrupt. right? Zoom has been down 80 or 90%. And a lot of those tech companies are struggling. So when they were doing well, they put their money in the bank, stuff was fine. Silicon Valley Bank said, hey, they're not going to touch this money. They're not going to need it. I'm going to loan it out to people. I'm going to make some money off of their money. Well, once things started to get rough and all of these companies started to withdraw their money, Roku being one of those that hasn't a stock that hasn't done well, once they started withdrawing their money a lot more often, that is when things got hectic for the bank and it became too tenuous for them to kind of balance the investments versus the savings and deposit side of things.
Feel free to run through your resume, but like, what are you looking for next? Either what are your concerns, what are your pros, what are you looking for out there in the financial atmosphere, if you will?
Yeah, this is a good question. So for those that may not know, my background is in finance and economics. I got my econ degree at Hampton. I have a master's in business from UT Austin. Shout out to the 512. And I've been doing finance for almost 13 years. It'll be 13 years later in September. In terms of what I'm looking for right now, I'm just sitting back and watching because it's hard to call. It is always very difficult to see where these things are going to go. But two, I think the most important thing is the whole FDIC insurance thing. If you have been to any bank, or you can check out your banking app right now, scroll all the way to the bottom of the app, I guarantee you're going to see a little FDIC sticker, or at least a logo. That is the Federal Deposit Insurance Corporation. They ensure that you are going to get every dollar from your bank, assuming it is up to $250,000. And people who had their money at Silicon Valley Bank, they were able to access their money today. So 48 hours later. So this to me is not a 2008, not a time to panic. I'm just sitting back and say, hey, this is one of the other things I can add to my millennial list of trauma from things we have seen since 2008 and beyond.
I'm going to end on a happy note, but I got to ask this question too. So, the popular meme right now, at least for a senior millennial like myself, I'm not sure what these TikTok dancers are doing, is a red flag. So what would be a red flag? Like if we did wake up on another day, you'd be like, oh, raise your eyebrows a little bit. What would be a red flag that we should be watching out for? Yeah,
so a red flag is any major national bank going under. That is something that would really raise an eyebrow for me. It's one thing, like, ain't nobody heard of Silicon Valley Bank, if we're being honest. Like, does anybody know the 16th, 17th, 18th largest bank? That answer is no. But I would be very concerned if this starts to be Wells Fargo, JP Morgan, Bank of America. And that's because these are much larger consumer bases, and that's going to tell us a lot more about the economy as a whole. And again, the clientele is going to be a lot different. You're going to have some tech, you have some regular people like us, you're going to have oil and all types of different businesses in there. But right now, again, this has all been a tech issue, right? Tech layoffs primarily, tech stocks crashing primarily. Everything else has been okay to find. And until I start to see that, come across the board and more sectors starting to fail, then that's going to raise a red flag for me.
I have no doubt that there'll be more questions, and for a video response, drop a comment in the description. Everything that we'll talk about today will be linked in the video description below. I showed them on the screen there, but go ahead and plug yourself where they can find more of you on the social medias.
Yeah, you can find me on all things social media at Building Bread. You can get my book, From Burning the Blueprint, Rebuilding Black Wall Street After a Century of Silence, at Amazon. And you can also get it at buildingbread.com/blueprint.
Thanks for coming on the show, Kevin.
Thank you for having me.